All right, welcome everyone. You're live, Mr. Black. Another beautiful day here in Phantom Land. Hope everyone's having a great day today. If you guys have any questions about trading, if you have any tickers, any currency pairs, anything you guys want to check out, just let me know in the chat, guys, and we will check it out together. What's up, PK? How you doing, man? What's up, shopping cart? I wonder if... What's up, Mason? Pound CAD? Sure. You can check out Pound CAD. Let me put it on the list. Let's get our list started here. Pound CAD. There we go. Oh, let me do this here. What's up, Justin? All right. So start on the higher time frames first, guys. SPY BMNR. Hold on a second. Let me put it on the list. SPY BMNR. Spot gold. Gotcha. Nice, Mason. That's always good. Ripple? Sure. Ripple. UPST. All right. All right. So whenever we start our analysis, guys, we always want to start from a top-down approach. Doesn't matter if you're a day trader or swing trader. You still want to be aware of what's happening on higher time frames because higher time frames tend to be more powerful than lower time frames. Gotcha. Let me put it on the list here. So even if you are like trading on like 5-minute, 15-minute candles, you don't want to ignore those higher time frame levels because they are more powerful. It requires more capital, to put it bluntly, to drive price action on a monthly time frame than it does on like a daily time frame, and so on and so forth, right? So we're going to clear the charts. We're going to start from scratch. And what we're looking for is we're looking for areas of institutional order flow, IOF, right? Where are the major banks and financial institutions buying? Where are the major banks and financial institutions selling the charts? The reason all professional traders start with this form of analysis is because most major price action is driven by financial institutions, right? It requires a lot of capital to drive price action in the markets. And the only people who really have enough capital to place orders of that magnitude, like massive orders, are the major financial institutions. So when we're looking at the charts, we're always starting by looking at where these big boys buying and selling to see if we have an opportunity to buy and sell with them, right? I'd much rather trade with the people that actually can control price action than just try and trade on my own chasing price. So here I'm going to start on the monthlies. And the first thing I'm looking for is these areas of IOF. I have somewhat of a continuation pattern right here. Can everyone see this? This is an impulse up, balance, and then there's a little gap here, but realistically that's a base as well. You could realistically draw around both of these levels if you wanted to. If you wanted to tighten up structure, you could just draw just around this one red base candle right here. It is a very long wick hanging out of the bottom of this base candle. So that's not ideal for us because if we look at this structure, what we can see is some bank bought here driving price action up, leaving behind unfilled orders. We already retraced, came back in, hit the unfilled buy orders, pop back up, came in a second time, hit the unfilled buy orders, pop back up. So it's a deep zone, means we filled a lot of the orders before impulsing out, and it's been retested twice. So that's not ideal structure for us, but it is what we have at this time, right? What's up, Stan? How you doing, man? All right, on the sell side, we're going to look over here from the top, and I'm going to look to the left to see if we have structure over here. And over here, I have kind of awkward structure, right? I have this is not really a base candle, this green candle here, but this over to the left right here is a base candle. So I have an impulse, balance, and kind of an impulse right here, continuation pattern, which has already been retested right here, hitting those unfilled orders, rejecting. And now we came in again, second time rejected, and then we came in a third time rejected, and now we came in a fourth time rejected. So can everyone see, I'm going to mark this red for institutional selling. So what are we seeing so far on the charts? We're seeing that some banks sold here, driving price action down, leaving behind unfilled sell orders, and some bank bought here, driving price action up, leaving behind unfilled buy orders. But in both cases, we've hit the levels multiple times. Can everyone see that? Give me yes if you can see that visually on the charts, right? You can literally see price going from institutional buying up to institutional selling, hitting the unfilled sellers, getting pushed right back down to institutional buying, hitting the unfilled buyers, getting pushed right back up into institutional selling, just back and forth and back and forth. And this is the way the markets work. Hey, what is soca lover? Soca lover. I don't know what soca is. I saw someone say it the other day, and I don't know what type of music that is. What is that type of music? What does that stand for? All right, so we have institutional buying, institutional selling here on our higher time frames. We're going to drill down to the weeklies, and what we're looking for on our intermediate time frame is we're looking for trend. So we're looking for trend, and then we're going to see if there's any correlating structure as well. You know what I didn't get? I didn't get my glasses, guys. Well, it is what it is. All right, so here we are on the weeklies. First things first, I want to evaluate what is my current trend here on the weeklies for pound CAD. Is this an uptrend? Is this a downtrend? Or is this a sideways moving trend here on pound CAD? And let me just check something here. What's the close here? 8591. What's the close here? 8588. So that is a higher high right there, just so everyone knows. It's a musical genre that originated in the Caribbean. Carnival music. Okay. Carnival music, to me, I think of like Brazilian carnival music, but I'm imagining it's different than that. Cool. I want to hear what it sounds like. I'm not really familiar with it. I'm not going to hear it right now because otherwise, you know, copyrights and all that stuff. But I'll check it out later on. So if you look at this carefully, we had very clearly an uptrend, right? Higher highs, higher lows, higher highs, higher lows right here, right? And we had this little gap correction. And then I think from here, from here to that little base, I could be wrong, but I believe, what's the closer? 8571, open, 8572. There was no gap there, no gap correction there. So that was the controlling higher low, and that was the controlling higher high, right? And then we candle closed past the controlling higher low here. Can everyone see how this red candle closed below this control point? So this was the controlling higher low in that uptrend, and then we red candle closed past it, right? When we red candle closed past it, what's up, T? When we red candle closed past that level, we ended. Oh, that song? I got you. Okay. When we red candle, thank you, DUI. When we red candle closed past this level, we ended the uptrend. You can't have an uptrend with a lower low, right? Uptrends are defined by establishing higher highs, higher lows, higher highs. So this red candle ended this uptrend. And then we started establishing a downtrend. Lower lows, lower highs, lower lows. And then what do? We reversed again. We started doing higher highs, higher lows, higher highs, higher lows. Higher highs broke past control of that little downtrend, right? Higher highs, higher lows, higher highs, higher lows. So this is currently an uptrend, but I just wanted to clarify for everyone, it's an uptrend because of this area, not because of this area. Does that make sense to everyone? I'm going through it just so people can understand, because a lot of times people just look at this kind of from a generic perspective and be like, oh, what's up? And it's like, well, you got to look at it a little more in detail than that, right? It was an uptrend here. We broke the uptrend, then we established a new uptrend. Is everyone with me on that? Does that make sense? Give me yes or like if that makes sense to you, right? Because it is important to understand these little microcosms of trading. Like when we came back into supply and we hit those unfilled sellers, we actually reversed enough that we established a downtrend. And we established that downtrend all the way into demand again. And then we established a new uptrend, right? Which isn't crazy. We're hitting these major higher time frame levels and we're reversing trend when we hit those major higher time frame levels. Cool, cool, cool. All right, so we're currently in an uptrend. What does that mean for us as traders? Well, that means ideally we would like to go long. We can see that we've just rejected from institutional supply again, right? So this supply zone's a little bit beat up. We've hit this thing multiple times. Yeah, I'm going to need to get my reading glasses, guys. Hold on a second. I'll be right back. It's hard to read. The comments blurry. 1 second. All right, I'm back. That's much better. Well, it's relatively better. It's not much better, but it's a little better. All right. So we're in an uptrend, which means ideally we'd like to go long, and we just rejected out of supply again, right? So now we're going to do the same thing we were doing in the higher time frame. We're going to look for areas of institutional order flow. Where are the banks buying? Where are the banks selling here on the weekly charts for pound CAD? Now I have a pivot reversal right here. I have this drop, base, rally right here, clear imbalance in order flow, right? Some big banker institution bought here, driving price action upwards explosively on pound CAD. But I have a concern about this level. What's my concern about this level, guys? Why am I concerned about that level? Oh, absolutely. Absolutely, Soka. We're going to look down there as well for MTFC, for multiple time frame correlation. Yeah, it's very close to supply, right? We're very close to supply here. So I'm concerned about the risk to reward ratio. Now it doesn't mean there couldn't be a level within here on the daily that's possible. So we're not going to delete it, and we got to be aware of the level. But I'm thinking that we're probably going to be too close to supply to have a viable trade. We'll see when we drill down, right? So we're going to keep going. We're going to keep going, and we're going to find the next level. And I have this level right here. I have this impulse, balance, impulse, continuation pattern right here. And that's an interesting level for us because that is not only a continuation pattern, that is weekly, monthly correlation, zones on top of zones. And we love, love, love zones on top of zones. Why do we love zones on top of zones? Because they form stronger levels of imbalance. If I have multiple banks and institutions buying at or near the same price point, or if I'm just refining the structure of where the same financial institution actually bought, that area of multiple time frame correlation is going to give me a stronger level of imbalance, right? So this area, this darker area where the two zones overlap, this is why I keep my zones semi-transparent, guys, so we can see the overlay, right? This dark area in which the two zones overlap will form a stronger level of imbalance, even more unfilled orders sitting in that level. I don't know which one you're using, Minj, but most brokers will typically practice, 2 to 3 pip spreads, so you shouldn't be having such tight structure like that. Unless, are you trading during illiquidity? Because there are times in the Forex market when liquidity is poorer, right? So like when the US market closes, a lot of the liquidity goes out of the market. And even though the market's technically still open because of Australia, there's not a lot of liquidity. So spreads start going up, right? You start getting spreads of like, I don't know, 20 pips, sometimes 30 pips, right? During that little interim period between the Asia opening and the US closing. I don't know if you guys have noticed that. That's something you have to pay attention to if you're holding positions from a swing position like the way I do. You have to be aware of that spread increase during the market close, right? Because you don't want to get stopped out if you have a stop that's very close to the level. Cool. So just something to be aware of. I don't know if that's what happened to you, but that's something to be aware of. But typically during liquidity, spreads are usually around like 2 to 3 pips, man. They don't usually get much higher than that unless there's a lot of volatility on an asset. And then the brokers want to be a little more careful so that they don't sacrifice their positions, All right, so nice weekly monthly correlation here on the demand side. Obviously, we have this standalone weekly up here. Now we're going to go from the current top of the supply and we're going to go over to the left. Now, technically, this is a supply zone, right? Can everyone see this? Impulse, balance, 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 impulse. That is a rally-based drop area of institutional selling right there. Can everyone see what I'm talking about? And even though we have retested this level, right? We've come out, come back in, hit the infillers, popped out once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, right? It hasn't been broken yet, right? Even though this wick came all the way through, it still hasn't broken because you can't break through a zone with a wick. You have to candle close through the zone to eliminate it. So it's still a valid zone, right? Yeah, that's weird, man. Then you shouldn't be having that issue unless you're setting your stop like really, really tight. I mean, what type of, your broker should show you what the spreads are. What are the spreads your broker is practicing? They'll tell you what the spreads are before you enter the trade. Here I have a nice pivot reversal. We can see that that's already been hit and already been hit twice. So, all right. So we have our weekly supply, weekly demand. And now how's this risk to reward ratio looking, guys? It's looking even more difficult, right? It's looking really difficult for us to find a viable trade up here. Down here, we're still okay, but up here, ooh, we're right on top of each other. And this is a very important aspect of trading, right? Trading is not just about finding high probability trades. Of course, you need to learn how to read charts. Of course, you need to learn how to find high probability trades, but that's not enough. That's just step one of trading, right? Learning how to read charts and find high probability trades is step one. Professional traders understand that even if you do everything perfectly right, you're never going to win every trade. So what we do is we look for high probability trades, but we take that extra step and we look for high probability trades that have low risk with high profit targets, good reward to risk ratios. That way, when we lose a trade, not if, when we lose a trade, we lose very little on our losing trades. And when we win a trade, we're maximizing our profits on winning trades, maximizing profits by having one winning trade make up for multiple losing trades. And that aspect of risk management is one of the most critical aspects of trading, right? Trading is all about risk management. You'll see these people on social media go nuts, like over leveraging their position, saying, I'm a full port on this trade. And it's like, you are absolutely trading incorrectly. right? Can you imagine if you worked at Goldman Sachs and you turn to your floor manager and you're like, I'm going full port on this trade? You think they'd allow you to do that? JM, it's not about the color of the candle per se. There are situations in certain time frames where the color of the candle will come into play. But no, I'm looking for structure. So if I'm looking for a demand zone formation, I'm drawing from the bottom of the lowest wick to the top of the highest body of the base candle or candles. If I'm looking for a supply zone formation, I'm drawing from the top of the highest wick to the bottom of the lowest body of the base candle or candles, if there's more than one. So like, for example, here on the weeklies, there were 1, 2, 3 base candles. I took the highest wick and the lowest body. So top of the highest wick to the bottom of the lowest body. Does that make sense? WM, sure. That's how you do it, Minj. You maintain that proper risk management, never exceed more than, ideally no more than 2% VAR. And then you could have losing days, right? There's nothing wrong with having a losing day, right? You will have winning days, you will have losing days. There's nothing wrong with having losing days. That's why we have risk management in place. Nobody is a perfect trader, right? We trade every day. Do we win every trade we place, guys? No, right? We have winning trades, right? And we have losing trades. By no means do we win every trade we place, but we look for trades that have low risk with high profit targets so that when we lose much less than what we make when we win. And that's really what trading is about, right? Nice, Charles. I didn't look at AMD yet. So it's all about like really being disciplined, treating this like a business, right? Treating this like a business. Somebody asked me that yesterday, like, did you ever go and try and double your account? I'm like, no, why would I, man? Like, imagine if you own like a McDonald's franchise and you decided out on a whim to see if you could flip 15 burgers at once. It's like, why in the world would you do that? That makes no sense. That's just taking an unnecessary risk for zero reason, right? Like, you're not going to get any big benefit out of that. Oh, I'm saving the X amount of time that I would take to flip each one individually. It's like, yeah, or you're dropping a bunch on the floor and you're throwing revenue out the window, right? Trading is risk management. The reason you see these big financial institutions so consistently profitable is because they understand that. Even the biggest investment firms in the world, the BlackRocks, the State Streets, the UBSs, they lose trades every year. Every year they lose trades, right? There's no such thing as the perfect trader. Everyone has winning trades. Everyone has losing trades. So it's not a matter of being right. It's a matter of making sure that when you're wrong, you lose much less than when you make when you're right. That's what trading is about. And that's why most professional traders will practice low risk, right? Most professional traders will never exceed more than 2% value at risk. In other words, if they lose a trade, the most they lose is 2%. For me, I've been trading 27 years. I don't exceed 0.5% exposure. And that's why my way of where, am I ever stressed about a trade, guys? Have you guys ever seen me here on a live where I'm sitting there going like, let me just check back on that trade and see what's going on, guys? Has anybody ever seen me doing that? No, because I know, like, worst case scenario, even if the trade moves against me, what's the most I lost? 0.5%. I'm fine if I lose 0.5%. I'm not going to be stressed about it, So practicing that proper risk management, not over positioning, not over leveraging, being very disciplined in your trades, taking, of course, only high quality trades, but taking high quality trades that have low risk with high profit targets. That's how you make this into a business. Like, if you want to make a living trading, you got to have that mindset, right? Not the, I'm all in on this one trade, I'm going to try and double my account. It's like, no, all you're going to do then might as well go do something else, right? I can't say the word here, but might as well go do something else. If you want to just play around, go play around somewhere else. This is a bad place to play around in, right? You're going up against professionals and they are not playing around. That's not true, Colossal. That's just short-sightedness on the trader, right? That's all that is. When people say that, what they mean is in their timeline. They've created some timeline in their head, right? And they've decided that they want to get there faster. And what happens to those people? Do they do well in trading or do they do poorly in trading? Right? That's just the reality of it. They do very poorly, right? 97 to 98% of retail traders lose money trading. Almost all of them follow that exact mentality, right? I'm trading with a small account. It's not enough money. I need to go and double. It's like, dude, what are you thinking? This is a business. You don't put everything in on one trade. That's crazy. That is not how you do it from a professional standpoint. I would never make any sort of earnings or lifestyle representation do it silly. It's against federal law. If you're wondering why you've never seen a professional trader talk about how much money they make, is because it's illegal. It breaks federal law. If you want to know what law, here's the law. You can go right to federalregister.gov. You can look up federal law 15 USC 45 for yourself, and you can read all about compliance regulations. So in the United States, you are not allowed to legally make earnings or lifestyle representations. Cool. Colossal, again, short-sighted. You're worried about the money. You're thinking about money. You're not thinking about process. If you are a consistent trader, can you find funding, guys? Is it hard to find funding if you are a consistent trader? If you can prove consistency, if you can prove that you are a consistent trader who consistently hits their profit targets after wins and losses, is it hard to find funding? It's the easiest thing in the world, man. I'm offered money every week. People offer me money here on lives all the time. Can you trade for me? Money is not hard to find if you know what you're doing. That's not difficult at all. The hard part is knowing how to trade. And that's what I'm saying. It's short-sightedness to think like, oh, but I only made like whatever. I only made $50. It's not about the money. It's about the process. It's about whether you get good at it or not. Right? That's how you do it. I'm doing great, Kicks. DeWitt, if you want to learn more, man, if you go right here, right to our TikTok profile, you can click there and you can register for the workshop. We have a workshop tomorrow night. So you couldn't have come at a better day, man. It's free. We'll teach you a lot more about trading. All you have to do is click here to register. And in the workshop, we'll do a deeper dive in all this stuff, man. We'll teach you more about how professionals trade. We'll do a deeper dive in all this. How the markets really work, because most people don't really understand how the markets move. How professionals trade and analyze the market, like how we identify institutional order flow, where the banks buy, where the banks sell. All the Phantoms worked as professional traders. So to be clear, we did not invent IOF analysis. Banks have been doing this for decades, if not hundreds of years. We're just teaching you more about how we were trained when we worked at investment firms. How to trade in all market conditions, whether the market is bullish, bearish, or consolidating. How to use leverage properly so you can reduce your risk, generate high rates of return. The difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it. It's free, it's fun, costs you nothing, and then you can see if trading is something you want to pursue. Teaching people how to trade is not about money. It's both. If I didn't have mentors, I would never have gotten to where I was. But to be clear, we're not a free program. You have membership. You don't have to become a member, but we do have membership as well. So if people are interested in becoming a member, they can pay to become a member. But for me, primarily, man, it gives me something else to do, man. I trade 30, 40 minutes a day. Most of my day is doing nothing. So it's nice to actually see people succeed with it. You have multiple members in the room, man. You can ask them about it if you want. But just mindset thing, man, all right? Wealthy people think of multiple streams of income. Wealthy people think about how they can utilize their resources to generate more returns and so on and so forth. Okay, what did you ask me, Colossal? I'll let members answer that for you this. Yeah, but I don't have anything against prop firms. What's your question about prop firms? I don't make earnings representations, Brand. It's against federal law. Oh, well, it depends where I was in terms of my trading career, Colossal. The thing about prop firms is I think people put the cart before the horse with prop firms. They think of prop firms as like this thing where if I just pass evaluation, now I can play around with this money. And it's like, that's not the way prop firms should be treated, right? The purpose of a prop firm, at least in my opinion, is if you are a consistent trader that has been consistently hitting your profit targets after wins and losses, right? If you're consistently hitting profit targets after wins and losses, that's when a prop firm is useful. And you don't have enough capital to trade with, right? Because a prop firm will allow you to grow your account more quickly. Does that make sense? But if you're still in the learning phase, if you're still trying to learn how to trade and you're having difficulty, let's say difficulty passing a prop evaluation, you don't need a prop firm yet. There's no reason to have a prop firm at that point because you're not a consistent trader yet. And then usually what will happen to those people is they'll just hit drawdown or they won't pass evaluation and they'll just throw money away 50 or 100 bucks at a time. Sorry, what was that? What's against federal law? All disclosing money. Yes, any sort of earnings or lifestyle representation brand is against federal law. $1, I'll put it on the list, man. That's why if you guys ever see people online, right, who make earnings or lifestyle representations, you should be very dubious because no legit trader, nobody who ever worked at an investment firm would ever do that because it leaves you susceptible to a massive fine. There are people, I understand that there are people that do that online, but understand either that means that they aren't aware of the law, which right off the bat, do you want to learn from someone who has never worked professionally in the industry? Or worse yet, they are aware of the law and they don't care because they think they can scam enough people that it outweighs the fines, which unfortunately also exists, right? Yeah, man. So I mean, if you're still losing challenges, brother, learn to trade first. Learn to trade first. There's no reason to be using prop before that. I haven't seen that DY, but I mean, I don't know, man. I haven't never used. We have a lot of members that use it just fine. No issues with prop firms. I guess it would depend on the prop firm, right? Make sure, of course, it's a legit prop firm. Depends, brand. I've never seen someone go get arrested. I've seen people lose a lot, right? I've seen people lose a lot. Like I've seen people lose their homes and their cars and their houses and their savings and all that stuff. So it depends how egregious you are. Nowadays, a lot of people try and CYA by doing what's it called? Big disclaimers at the beginning. And I can't show you it right now because unfortunately there's some restrictions in terms of how we can do that now. But you can see, when you see sometimes you'll see certain things and you'll see a quick like 2-second, not even 2-second, like a 1-second disclaimer at the beginning where it just like flashes a big thing and it has all this legalese and then it just goes right into the video. Next time, pause that one. Pause that disclaimer and read through it because that disclaimer is one so that they can get away with skirting the compliance law regulations, which right off the bat, that's a big, big red flag, right? If somebody's having to put all these disclaimers about how they're dubious and whatever. It's not WM, IWM. Pardon me, man. IWM. I thought it was waste management. ARPA? No, I don't even know what ARPA is, man. Oh, $1. I got you, man. Euro, dollar. All right, so let's keep finishing up with our analysis here. Okay, so a spread is the difference between the bid and the ask price. So the bid is the best price at which buyers are willing to buy. The ask is the best price at which sellers are willing to sell. And the spread is the difference between those two prices. NQGC, hold on a second. NQGC. You did want WM? So it's WM, not IWM? Pound Aussie. Pound Aussie. You want me to check out ARPA? I'll check it out, man. ARPA and Apple and IWM. Okay. Oh, it was two separate people, man. I'm sorry. My mistake. I thought it was the same person. I had made the mistake. Got you, boy. I haven't looked at Tesla. How's it doing? All right. Let's keep going, guys, because otherwise we're going to get bogged down in just writing down tickers and not actually doing analysis. So let's finish up here. We have this continuation here, impulse, balance, impulse. There is a level of imbalance there. It's already gapped out and retested. So if price were to come back down here to this level, standalone daily at the 181.43, there's still a potentially viable trade, but because it's already been tested once, we would be using a confirmation trade at this point. How about this little guy up here? Unfortunately, same thing. If you guys look, can you see how it gapped out before retracing? You see how there was a gap between the close and the open here? That is the first hit. And that is where we look for entries, guys. For anybody who's not a Phantom member, we look for entries on first retracements. So that's a breakaway gap back to a first retracement. That is where we're typically looking for entries, right? So unfortunately, man, again, only a confirmation trade at best here at the 83.79. If I were to take that long, I think there's still enough room for you to be able to get a confirmation trade out of it. So if price does come back down here, you could have a potential confirmation trade because it's above a 3-1, right? So you'd have a little bit of breathing room, not a lot. That's about it. That's how much room you'd have for a confirmation trade. Confirmation trade, for those of you who don't know, is when we wait for a candle close reversal out of the zone, confirming that there's still unfilled orders, but helping us sidestep liquidity traps, right? No, you'd pick up where you left off, Colossal. Nice, man. That's awesome, man. Cool, cool, cool. So that's what I got for you on Pound Cat, man. Yeah, I can't emphasize enough, guys. How long would it take me to blow my account with the VAR I practice, guys? I practice 0.5 VAR. How many trades would I have to lose to blow my account? Mm-hmm. We're all here, Colossal. I'd have to lose 200 trades in a row to blow my account, guys. You get what I'm saying? Like, that's why I'm saying, like, have you ever seen a single professional trader say, blew my account? No, because professional traders don't take insane risks with their accounts. That's not what trading is, right? Trading is all about discipline, not over leveraging, not over positioning. Like, you should never blow your account off a trade or a few trades, right? That just means over positioning. So I can't emphasize enough how important risk management is to you being a consistent trader. Does that make sense, everyone? Blew up your account in a good way. There you go. In a good way is okay, man. It's not a bad way. Everybody does. This is my world. That's everybody. It's not just you, man. That's the hardest part of trading. That's literally the hardest part of trading. Because it wasn't our fault, That's why he's looking to rejoin. I believe. Isn't that right, Colossal? Because you wouldn't blow your account if you followed us. We haven't had a losing month since we launched TradePhantoms. What's up, Suma? US 30? Sure. I got you, Abdul. Oh, here we go. No, guys, I don't want to do lives together. I never want to do lives together. No need to ask. It's fine, 2K. It's fine. You know what TradingView is nice for? It's very easy to use. That's what's nice about TradingView. It's just easy to use. We're an ETH, brother. Nothing for me to do on SPY. What am I going to do up here? Because you got to think about how we're trading, right? The way we trade is we identify where the banks and institutions buy and sell, and then we see if we can buy and sell with them. Same thing, though. It's going to be the same as SPY, right? There's nothing for me to do at all-time highs. I need to have a target. Because do I know where banks are going to start taking profit here on SPY or on SPX? I have no idea. I can't predict the future, right? I'm not rubbing a crystal ball saying, oh, they're going to start taking profit up here at 620 or 625. I don't know. Nobody knows that, right? That's not the reality of trading. So when we trade, we don't trade blind. We're not trying to call tops and call bottoms. We're actually seeing where banks buy and sell. And if price comes back to those levels, we're seeing if we have an opportunity to buy and sell with them. But I need to have a target, right? I need to be able to calculate my risk to reward ratio. No, I think he's a terrible trader. This is my world. I think he's a fake trader. Actually, I don't think he's a fake trader. He went to court for being a fake trader. Wait for retracements, Abdul. Exactly right. Wait for retracements because then we can have targets and then we can calculate if the trade is worth taking, right? Not every trade is worth taking. Not every high probability trade is worth taking, right? Because it always comes back to risk management and making sure you're taking trades that have low risk with high profit targets. So I need to have a target for me to be able to calculate my entry. You should Google his name and Google lawsuit this. I mean, forgive me, man, but you're so skeptical of stuff and you never Googled the guy. Like, Jesus, Google him. Stop worrying about me. Google the guy you're actually following. There's nothing for me to do here, brother. There is no chart analysis that I can do on this. It's the first result. Google his name and then Google the court case. It'll be the first result, and you can learn all about him and how ethical he is. Which one, man? Oh, dude, there's so many fake traders online. It drives me nuts. Colossal. It's the worst. Not that guy. That guy is all in for you following his channel and him making millions of dollars off of your money. But he doesn't trade. And by the way, I'm not saying that in my opinion he doesn't trade. In the court documents, he admits that he has never made money trading. That's why I encourage people to go look up the court documents. But I will tell you, man, people like that guy so much. I've never watched him at all, right? I've never heard his voice once in my life. People like that guy so much that even when they learn about the court case, a lot of times they'll be like, well, I still like it anyway. I'm like, I don't know what that means, man. Like, that sounds more like a cult. Like, you're not making money with the guy. He's been found to be fraudulent. And people are still like, I still like following him. It's like, okie dokie, you follow what you want. Yeah, his concepts work for me. It's like, I'm sure they do. Yeah, that's why you're working a job instead of actually trading for a living, right? It's just so funny, man. And then people don't understand that a lot of the people who tout his stuff, when he first started that thing, he started it as a pyramid scheme. So anybody could become a reseller of his coursework. And that's why he did that, right? So that's why you have like people be like, but I've seen other people on YouTube say that it's good. And it's like, they make commission off of every person that they sell. And then if they have other people under them, they make commission, like MLM, right? Like multi-level marketing. It's the same thing. So it's just like, don't just believe people blindly. Look them up, Google them, see who they are. Because a lot of these people, unfortunately, man, especially the people with big followings, this is the reality of it. Like, the way we post stuff is one of the most difficult ways to get followers, because I don't talk about earnings ever. I don't talk about how much profit we make. I don't talk about what cars we drive. There are no earnings or lifestyle representations anywhere here. It's all pure education. But what that means is you get much fewer views on this type of thing. If I posted a post where I said, I grew 100 to 12,000 in 1 month with this one simple trading trick, right? Would I get more than 1,000 views on that post, guys? I would get way more than 1,000 views, right? So you got to think, if people have millions of followers on social media in this realm of what this area in which I work, right, of trading professionally, usually they got there by misleading people with earnings representations, which is not only illegal, it's unethical, right? Even if it was legal to do, it's still very unethical, right? So it's just something to be taken into consideration, guys. When you're looking at stuff like that, be careful. That's the best way I can put it. No legit trader is going to talk about how much money they make. It's against the law. You can't do it, right? Yeah, wouldn't that be great, KX? Oh, 100%, Minj. And you know what I would do if I really want to do it? I'd locate myself outside the country. So I wouldn't be subject to US law. That's how I do that too. If I really wanted to do it the way, what's his name? The guy who's in the lawsuit right now. Oh, what's his name? Q. That's what Q's doing, right? And that's exactly what Q did. What did he do? He located himself outside of the country. And he did that. But then he overstepped, man. He got too greedy. What did he start doing? He started trading against people in the prop. You can't trade against, you can't use inside information to trade against your clients. That's against the law. And so even though he had put himself outside of federal law for compliance, and he would do all those earnings representations, right, leaning up against cars and stuff like that, then he just got too greedy. He couldn't help himself. He's like, I've already scammed people out of millions and millions, but that's not enough. I need to scam more. It's like, Jesus, dude. And now he's in court. So he's going to deal with that, man. Yeah, there's also that, right, man? Hopefully, ethically, people have better semblance in that. You're saying the federal law? Yeah, boy? 15 USC 45. That's the latest iteration of the law. Yeah, he's currently in litigation right now. All these guys end up getting caught eventually, guys. All the guys. Right now, 2 of the 3, like I call them the 3-letter people, right? So far, 2 of them have already gotten caught, right? So you think number 3 is trembling in their boots right now? 2 of the 3-letter people have gotten caught. There's only 1 left. Yep, both of those, man. There's only 1 left. No, not at all, man. I mean, what are we going to do here, brother? Nothing's changed since yesterday, Dre. We're in the same area, brother. I'm not going to trade it up here in the zone that's already been hit twice. Like, no way, man. What am I going to do here? There's nothing for me to do here. We have a little bit of a weak inbound here, came back in supply. There's nothing for me to do here, man. Even this level all the way down here at the 33 or 315, it's too close to supply. The risk-reward ratio sucks. But there's nothing new on spot gold. Well, I call them 3-letter people, man. I don't want to say the name, but you guys can guess who the 3rd one is. Even though I think they're the least egregious of the 3, to be clear. But they do some scummy representations. All right, XRP. Let's go look at Ripple. All right, so for anybody who's new, if you want to understand what we're doing, if you're new to our lives, all right, and you've never seen this, all right, we are definitely not the only people in the world that know how to trade, man. But there aren't a lot on social media that do. I have tons of friends who trade, right? I traded professionally, so I have tons of friends who trade for a living. It's just that most people, absolutely DY, it's just that most people who trade don't have interest in teaching others, if that makes sense. I'm 45, Masquerade. And to be very, very fair to all of those people, I've been trading for 27 years. For 25 of those 27 years, I did not teach any retail traders how to trade. So, you know. No, he apparently just was, man. Apparently just was. So, you know, I don't begrudge the people. I understand that it's a lot of work to teach people how to trade, guys. Like, it's not that easy because trading, it's a very learnable skill set. Like, anybody can learn to trade if they're willing to put the work in. But it's not overnight, right? You're not going to learn to trade overnight. So it's like you have to teach people. You have to teach people to be disciplined. You have to teach people to be committed, right? Because it takes a while to learn. And then you have to teach them all these skill sets. You have to have them practice the skill set. I think of trading, the way I try and put it to people so that they can understand in terms of a learning aspect, I think of trading of like, it's like teaching someone how to speak a foreign language or how to play a musical instrument. And what I mean when I say that is anybody can learn to speak foreign language, right? Anybody can learn to speak foreign language if they want to. But in reality, and if you ask the average person, would most people say they would like to speak more than one language? Most people would say, yeah, I'd love to speak more than one language. How many people do you know that speak multiple languages? It's not that common, right? Unless they grew up in a household that speaks more than one language, for the most part, most people speak one language, their mother language, you know, and maybe they have a few things that they learned in high school of a second language, but it's not very common for people to be polyglots, right? That's not a common thing. And it's like, why not? You can do it, right? Literally anybody can do it. Anybody can do it if they want to. So why don't they do it? Oh, it's a lot of work. I don't want to do a lot. So what it is not that they can't do it. It's that they don't think that the payout is worth the effort, right? They don't think that the benefit of learning the language is worth the effort. Trading is like learning a language. Now, the payout is very obvious to people. People like the concept of being financially independent. But when they go and actually have to do the work, they're like, oh, I have to like do this for like months and months to then learn how to do it and then finally become consistent. Like, yeah. I was really hoping I could learn in like a month or two. It's like, no. The same way you wouldn't learn to speak Italian fluently in a month or two, you will not learn the language of trading in a month or two. You can learn it. It's not beyond anyone's abilities. Anybody can learn to trade, right? Because trading is very systematic. It's very process-oriented. When A happens to do B, when B happens to do C. So it's not beyond anyone's abilities because it's very systematic, but it's going to take you some time. So if you're not willing to put in the time, my answer is don't bother trying. Don't kind of try. Kind of trying is like not trying at all. right? There is no shortcut to trading. There is no one simple trick or one simple indicator or one algorithm that rules them all. That's not what trading is. Trading is like learning language. The same way there is no one specific word in Italian that is enough for you to speak Italian. You have to learn the language, right? It's not like what are the main 3 words of Italian? It's like, no, that's not how it works. So it's just a matter of like having the proper perspective, right? I don't know if that's the equivalent. This is my world, but fair. Okay, man. Well, you would have to do a few things. Pardon, is it TR1? You'd have to have an adult who would be willing to open up a custodial account for you, because you can't open a custodial account for yourself. So you'd have to have an adult willing to allow you to trade on that. But I would say first learn more about it and see if you actually want to do it, man. You know, it took me, to give you an idea, about 10 months to get to a point of consistency with my trading guys for me to be able to count on it as a stream of income. So, and I don't say that to dissuade you. I say that to give you a realistic vision. It took Mr. Green about a year. It took Mr. Blue about a year and a half, right? These are not numbers meant to intimidate you or make you think, oh, then why bother? Hopefully, people who have better long-term vision are looking at that as being like, oh, that's not that crazy. I didn't think of that as crazy. And I was set that expectation from the beginning. Like one of my mentors told me, are you willing to bust your butt for the next year, year and a half to learn this? And I was like, I will do whatever you tell me to do. And I wasn't lying. I was serious about it. I was committed to becoming financially independent through trading. So I was willing to do whatever he told me to do. Now, in my heart, when he told me a year and a half, what did I think I was going to do, guys? I worked at an investment firm, Ken. Exactly the face. Exactly. Great example. Musical instruments is another good example of it. In my heart of hearts, I thought I'd be quicker. I really did. And I was like, well, you don't understand how much I'm going to work. I'm going to bust my butt. I'm going to work harder than anyone else ever will. And you will see how quickly I will get there in comparison to all these other people. Yeah. First, I thought 3 months, KX. And then when 3 months came around, I'm like, 6 months. Like I kept adjusting my expectations. But you know what he told me at the beginning? He said to me, great. Okay, you're willing to put in the work. Fantastic. I don't want to hear from you in 6 months. I don't want to hear you whining about how you're not a professional trader yet, because you shouldn't be. You'll be better than you are now, but you will not be a professional trader in 6 months. And if you think you will, don't even bother. And he set that expectation with me so up front at the beginning. Like this was like the first week of me interning at the investment bank, that I was like, I couldn't say. Now, did I want to get there quicker? Of course, everybody wants to get there as quickly as they can, right? Everybody wants to get there as fast as they can. But it is what it is, man. It takes time to learn, right? If you met Tiger Woods and you asked Tiger Woods to teach you to golf, he can teach you the mechanics of a golf swing, but there's no replacement for you spending the hours there practicing that swing and getting better at it, right? Experience takes time. There's just no shortcut to it. So it's like, are you serious about it or not? If it's something where you're playing around with it, don't bother. Go play somewhere else, because you're playing up against professionals and professionals will crush you, right? That's just the reality of it. Exactly right, Soka. 100% the face. I was looking at it from a long-term. I didn't care if it took me 2 years, 3. I was like, then I'm financially independent for the rest of my life. I don't have to work a job for the next 40 years of my life. Like, dude, there wasn't even a doubt in my mind. I was committed to however long it took. That's the way I thought of it, But everybody has their own lots in life and their own ways of viewing things, and that's fine. I just try and give people the realistic perspective, right? Here on Ripple, man, we have this pivot reversal here. Impulse balance, impulse pivot reversal. Some bank bought heavily here, driving price action upwards explosively on Ripple. High probability of there being unfilled buy order sitting down here. It's only a 2.5 to 1 reward to risk ratio, but it's nice multiple time frame correlation. It's a good potential trade. It's a little tighter in terms of risk reward than I would like it to be, but viable potential long opportunity down here at the 209.932. In terms of the sell side, nothing really of interest for me, man, because we have the supply zone, but it's been hit once, twice already. So I'm not going to trade this supply that's already been hit multiple times, because every time we hit the zone, what are we doing? We're weakening the structure, right? Absolutely, Hoove. Absolutely, brother. Absolutely. That's why I tell people gauge progress, right? Michael Jordan did not become Michael Jordan after playing basketball for 6 months. It took him more effort than that, right? Yeah. Commitment outweighs intelligence every time, KX. Commitment and effort outweigh intelligence every time. It's one of the biggest pitfalls for intelligent people is they get hung up on the fact that some things came so easily to them in education that they think everything should come easily to them. And unfortunately, the world owes no one anything, right? You get what you put in. You put in the effort, you get the results. You don't put in the effort, you don't get the results. That's just the reality of life, right? What are you doing, Chaz? Like, what sort of analysis are you doing? All right, done with Ripple. Let's keep going. Let's go look at Upstart. Don't forget, guys, workshop tomorrow night. If you'd like to register for the workshop, it's free. So if you'd like to learn more about trading at a professional level, you can register right here on TikTok. Just go right here to our profile, click right here. And then to register, you just click this button. And in the workshop, it's going to be at 7 p.m. tomorrow night. We'll do a deeper dive in all this stuff, guys. We'll teach you more about how the markets really work because most people don't really understand how the markets move, how professionals trade. All the phantoms worked as professional traders. So we're just teaching more about how we were trained, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with the banks. This is the foundation of how professionals approach the market. How to trade in all market conditions, whether the market is bullish, bearish, or consolidating. How to use leverage properly. Leverage is really, really important, guys, especially if you're trading for income generation. So learning how to use leverage is fundamental to trading, right? Leverage allows you to reduce the amount of capital you trade with, reduce your risk, and actually generate higher rates of return. Literally risking less money to make more profit. 7 p.m. Eastern, Lobo, so 4 p.m. Pacific. The difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading. It's free, it's fun, costs you nothing but some of your time. And if you're interested in actually becoming a TradePhantoms Pro member, like if you want us to actually teach you and mentor you and trade live with you, we even provide you with trades that we ourselves take in the market. We even give a money back guarantee based off of our results. You will have a special opportunity to enroll at a discounted rate because it's the July 4th promo. So it's a good week if you're interested in joining because it's a pretty big discount versus the regular price. Cool, cool, cool. But first, come see if you actually want to do it. All right. I missed a bunch of questions. I think a level strong that gets blown through. Well, how are you? What sort of levels are you looking for? Chaz, like, can you explain more? Nice kicks. Always be talent. Absolutely, Koof. Absolutely. I agree entirely. All right, we got Upstart. Let's go check out Upstart. So let's go in more in detail because I think we have some new people in the room. Who's new in the room? Who's here for the first time with us? If you're new in the room, let me know if this is your first time and live with us. So I'm going to clear the charts. We're going to start from scratch. User, this. All right. So to understand how professionals trade, what's up, Joe? This is what we're looking for. The first thing we do is we always start from a top-down approach. Always from a top-down approach. This is not, doesn't matter if you are a day trader, if you're a swing trader, it doesn't matter. You should always, always, always start from a top-down approach. Even if you're scalping on like 5-minute, 15-minute candles, you should still start from a top-down approach because higher time frames tend to be more powerful than lower time frames, right? The last thing you want to do is be somebody who's looking at like just 5-minute, 15-minute candles and you're deciding to take positions. Like imagine if you were looking at the 5 minutes and you're deciding to go long and you're going long into major institutional selling on higher time frames. Which of those time frames do you think is going to win? Like if you have monthly, weekly, daily selling and you're trying to go long on a 5-minute candle, which do you think is going to win? The monthly, weekly, daily selling or your 5-minute long position? Which is going to be more powerful of those two levels? The higher time frames, right? So even if you're a scalper, take the time to mark off the higher time frames because it's going to help you become a better trader. And plus, what does it cost you? An extra 1 to 2 minutes of analysis to be an infinitely better trader just because you took that time? I mean, ideally at the multiple time frame correlation move, right? If they have some. So that's part one. We start from higher time frames. Now, the first thing we're looking for is we're looking for areas of institutional order flow. Now, institutional order flow, if you've never heard the term, is the professional term for areas where banks, hedge funds, and financial institutions are buying and selling. Why do all professional traders start with IOF? Well, they start with IOF because most major price movement in the markets is driven by banks and institutions. And this just comes down to the magnitude of the orders that banks place. Banks are not buying hundreds of shares or thousands of shares like you or I might. They are dealing in millions of shares, millions of contracts, millions of lots. They're dealing in these massive, massive positions because they have hundreds of millions, billions, sometimes trillions of dollars in assets under management, right? So they're dealing with a very large amounts of capital, which means they naturally place much larger orders than retail traders do. Does that make sense, everyone? So bigger amounts of capital, bigger orders, stronger imbalances of the market. So how do we identify where the banks and institutions buy and sell? Well, now we have to go and look at the charts and we have to understand what price action is. So to understand structure, you need to understand what price action is. When you see price rally, can everyone see how price rallied right here on Upstart? I'm just going to zoom in so you can see it better. Can you see how price impulsively moved upwards here? Big green candles rallying upwards. What does that represent in terms of price action? What is that showing us as analysts? How does price go up? Is it perhaps a better way to put it? Nice, Minge. Yep, buying, but specifically what? Specifically an imbalance of more buyers. Exactly right, Soka. The only way price can go up is if there's an imbalance of more buyers and sellers. Does that make sense, everyone? That's not an opinion, by the way. That's just economics. The only way price can go up on the chart is if there are more buyers and sellers. Period. Always and forever. What causes there to be more buyers and sellers? There's a myriad of things that can cause there to be more buyers and sellers. But regardless of what causes there to be more buyers and sellers, the only way price can ever go up on a chart is if there are more buyers and sellers. So when you see price rally, what you are actually seeing is you are seeing a graphical representation of more buyers and sellers. I'm going to let you figure that one out for yourself, Laurent. That's not that complex to figure out. Why would I be explaining something? Maybe because someone asked. Right. If you see an imbalance of more sellers than buyers, sometimes people ask questions, man. If you see an imbalance of more sellers than buyers, what's that going to cause? It's going to cause price to go down, right? So more sellers than buyers, price goes down. More buyers and sellers, price goes up. Everyone with me so far? Easy enough. That's just price action, right? What if I have equal numbers of buyers and sellers? What happens to price? If I have equal numbers of buyers and sellers, price consolidates. It forms basing candles, periods of equilibrium, where buyers are buying and sellers are selling, but price itself is not really moving. Can you see how the open and close price are very close to each other? So consolidation, price basically moves to the side. So this is what I will tell you, Lauren. Most people don't actually understand this about the financial markets. If it's something you know, that's fantastic. But just to be very, very clear, most people, not even a small portion, the majority of people don't understand how the markets move. No worries, brother. Cool. So people have to understand price action before I can explain structure. Because if I just say to you, impulse, balance, impulse, and you don't know the reasoning why, I find that to be less useful than if I explain why that's the structure, right? So I always think from the perspective of like the way my mind works, if people tell me something, I don't just blindly accept it, right? If people say, this is what you're looking for, impulse, balance, impulse, I'd be like, why is that what I'm looking for? That's the way my mind works. So I was trying to explain it to people so that hopefully they can understand beyond just memorizing patterns and actually understanding the structure behind the patterns. Like, why is that the pattern? Why is impulse, balance, impulse the pattern, right? So that's my goal with it, man, is to make people more knowledgeable about what they're doing, because it won't always look as pretty as the pattern we might want it to, right? Sometimes it'll look uglier. And if you can work through the price action analysis of it, you can still understand what's going on. Cool. No worries, brother. You're good. All right. So what do we know so far? So what do we know right now? We know there was an imbalance of more buyers and sellers driving price action up. We know there was an imbalance of more sellers and buyers driving price action down. Now we have to ask ourselves the second question. Could we cause this move? And by we, I mean us retail traders, right? I used to work in an investment bank. I don't work in an investment bank anymore. I do not have huge amounts of capital in my control, right? If I took my entire life savings and I bought as many shares of Upstart as I could at the limit price of $40, right? $40 is where this zone shot off. Could I cause Upstart's price to shoot up like that? No, right? Why not? Because Upstart's a 6.9 billion market cap, right? It trades on average about 350 million liquid a day. So for me to move Upstart's price, for me to really significantly move Upstart's price, I would have to be placing trades of roughly 30 million bucks and up. And for the most part, most retail traders just don't have that level of capital. That's just the reality of life, right? Even if you take wealthy people, if you say, well, what about like Joe Rogan? Joe Rogan's worth 100 million bucks. Couldn't he move the price of Upstart? And it's like, yeah, he could. Joe Rogan absolutely could move the price of Upstart. But the real question is, would Joe Rogan, if he's worth 100 million, would he take 1/3, 30 to 40% of his overall assets and put it all into one trade? Is that something he'd be willing to do? I would start focusing on this right here, Chris. This is the foundation of how professionals trade, IOF analysis. If you want to come to a workshop, man, we have a workshop tomorrow night. It's free. You can register, just go right to our TikTok profile and you can register for it. It's going to be tomorrow at 7 p.m. Eastern. If you just go right here and click right here, it'll take you right here, and then you can just click this purple button to register. Cool, cool, cool. Exactly, Lauren. Great example, man. Exactly right, right? It just requires large amounts of capital to drive price action markets. And Joe Rogan, even with his 100 million bucks, probably isn't going to take 1/3 to 40% of his money to put it all into one trade. That'd be an insane over leveraging of his position, right? IOF is institutional order flow, Fidel. That's the industry term. So I was trying to teach people actual industry terms because I find it to be more useful to people. There's a lot of unfortunate misuse of professional terms on the internet. So I try and focus on people and teaching people the actual terms used on trading floors, not, renaming terms so that people find my social media or something like that. Like I'm not calling these phantom go-go boxes, right? I'm calling it what it is: institutional order flow, supply, demand, whatever you want to call it, but focused on institutional, right? Not just generic supply and demand. Cool. All right, so what do we know so far? So we know that we can't move this market, right? But who can move the market? Who has enough capital where they can place a trade of 30 million or up on one single position? Who has that level of capital? I mean, for me, Hoove, I interned all 4 years of college, and then I applied out of college, and then I got hired, and then I progressed through the ranks. Yeah, financial institutions, right? Financial institutions have enough capital to actually place orders of that magnitude. Yeah, we have had some members that have gone through Phantoms and actually started working on investment firms as well. We have one guy's working over at Citadel. We have another guy's working over at Jane Street, and another guy's working over at it's a Swiss. I don't know. I didn't know the name of the company. It's some Swiss ETF company, but I wasn't familiar with it. Yeah, BlackRock, State Street, UBS, these companies that control huge amounts of capital, they can place orders of that magnitude very comfortably, right? It's not over positioning them for at all. They're very comfortable placing. Now, this is where it comes into play. So now pretend you're a big investment firm, right? So we know that we can't move the market this significantly, this impulsively. The only exception to that being fundamentally driven moves, right? But we know that banks are capable of doing it. This is the part that's interesting. If you're a big financial institution, if you are a State Street, right? Let's say you're a State Street, you're trade at State Street, and you see an opportunity here on Upstart to drive price action. You say, okay, we're going to position size out to buy 5 million shares of Upstart here at the limit price to 40 bucks, right? So they place this massive limit order into the market to buy 4 million shares at, 5 million shares at 40 bucks. Just because State Street wants to buy 5 million shares at 40 bucks a share, does that mean there will necessarily be 5 million sellers just sitting there waiting for them? Maybe Hoove. I don't know. I never tried doing that. We've had some members that got hired at firms, but so I don't know if they used our name to help them. I didn't ask, They just told me they got hired, and I was like, that's cool, man. I didn't dig into the hiring process or anything. I know for Jane Street, they had to pass an evaluation exam. No, that's very unlikely that there will be 5 million sellers sitting there, right? Average daily volume for Upstart is 5 million shares. So the chances that there will be 5 million sellers just sitting here at one price is basically zero. So what's going to happen to State Street when they place this order to buy 5 million shares? Well, they'll only fill some of the share. They'll only fill a portion of the share based on the liquidity available in the market. Does that make sense, everybody? No, it's not, Jacob. Is everyone with me on that? They will only fill some of their share. So they place the order to buy 5 million shares, but let's say there's 1.5 million sellers sitting there available at that limit price of 41 bucks. How many shares can they buy? 1.5 million. Does that make sense? You can't buy more than what's available. For every buyer, there must be a seller. For every seller, there must be a buyer. So what do? They buy the 1.5 million. They fill as much of their 5 million orders as they can. And so they grab up all of the sell side liquidity. Every seller that is available there at the limit price 41, State Street grabs. Now, by grabbing up every available seller, what has State Street just done in terms of the market? Well, they've just created a massive imbalance, right? We're on the monthlies right now. We're going to be drilling down in a second, Marvin. Suddenly, out of the blue, every seller that was available here at the limit price of whatever it is, 41 bucks, is gone. There are 0 sellers left. But what does State Street still have? State Street still has the rest of their order. State Street wanted to buy 5 million shares, not 1.5 million shares. So they're left with 3.5 million unfilled buy orders sitting here, UFOs as they're called in the industry. And now we're just back to economics. If I have 3.5 million buy orders, 0 sellers left, every available seller was taken out by State Street, right? What is that going to cause price to do? Well, the markets move like anything economic. They move through the law of supply and demand. If I have more demand than supply, more buyers and sellers, price is going to go up. Not only is it going to go up, it's going to go up explosively because that is a large imbalance in the market. Is everyone with me on that? Give me yes or like if that makes sense to you. So price explodes away from this period of equilibrium because State Street has exhausted all sellers at that price point and left a major imbalance in order flow. Meanwhile, what is State Street left with? Well, they're left with those other 3.5 million unfilled orders. So the way professional traders use this information is we identify where the banks buy, we identify where the banks sell, but we never chase the initial impulse, right? Why don't we chase price? The reason you don't want to get into the habit of chasing price is most retail traders chase price action. Most retail traders are very reactionary to price movement. When they see a bunch of big green candles, what do retail traders start doing, guys? What does the average retail trader do when they see a bunch of big green candles? I keep it this way so people can turn their screen sideways and get a better, like more real estate, man. They start trying to buy, right? They chase the price. When they start seeing a bunch of red candles, what do? They start trying to sell, right? They are always late to the move. They're always chasing price. And the reason that matters is the majority of profits that banks make in the financial markets are off of retail liquidity. Over 80% of the profits that they make in the financial markets are off of retail liquidity. So if you do the same thing as every sheep in the herd, what does that mean is going to happen to you? Well, 97 to 98% of retail traders lose money trading. So if you're following every sheep in the herd chasing price, that means you will chase price right into a lot of traps set by banks, because that is where banks set the majority of their traps, is for breakout traders. Does that make sense? Who's ever had the sensation where it feels like the market is out to get you? You place a trade in the market, you've watched all these videos on social media on basic forms of technical analysis, and you're like, man, it's like there's a camera looking over my shoulder. I swear, every time I place a trade, it's like the market's out to get me. Who's had that sensation? Where it feels like the market is personally targeting you, right? Yeah, to be clear, they are. They are absolutely targeting you. You are their liquidity. If you trade in the same manner as every retail trader, you should absolutely expect to get caught. It's like following all the sheep, and then you're surprised when you end up in the slaughter. It's like, well, you're heading towards the slaughterhouse. Like, why do you keep heading towards the slaughterhouse? I don't know. I watched the video and it told me to head towards the slaughterhouse. Like, stop listening to these morons telling you to follow everyone to the slaughterhouse, right? Learn the way professionals trade. Don't chase price. So professionals never chase price. We identify where the banks buy, we identify where the banks sell, but rather than chase the impulse, we wait for price to come back to the level. Because when I come back into this level for the first time, what's going to happen? Well, I'm going to hit all the unfilled orders that State Street wasn't able to fill initially, right? When State Street only filled 1.5 to their 5 million order, were they surprised? No, that's just business as usual for financial institutions. It normally takes banks months, sometimes years to fill their orders. So when they only filled a portion of their order at a time, nothing surprising was happening for State Street. That's the way it is if you're trading as a major investment firm. It's going to take you multiple attempts to complete your orders. So when price comes back in, they didn't give up on the rest of their 5 million order. When it comes back in, it's going to hit that huge pile of 3.5 million unfilled orders. And if I have a huge imbalance of more buyers and sellers, what's going to happen to price? Well, they'll fill a few more orders, but eventually if there are more buyers and sellers, what's going to cause price to do, guys? More buyers and sellers will cause price to go up. And that's where we're studying for an opportunity for an entry. Does that make sense, everybody? That's where we're looking for an entry. It's identify where the banks buy, identify where the banks sell, don't chase the imbalance, wait for price to come back. Have the patience to wait for price to come back to these levels so that you can take advantage of the bank's deep pockets, take advantage of their unfilled orders, and actually buy with the banks, right? Buy with the banks. Buy with the people that control the markets. Sell with the people that control the markets. Buy where they buy, sell where they sell. Cool, cool, cool. That's their favorite thing to do, Hoove. Those are the best trades when we can control price action in both directions, back and forth and back and forth. Those are the best. That's the best you can do, right? If you drive price action in both directions and you have all the retail traders chasing price in between, you're just liquidating the retail liquidity every time it comes back into your level, right? That's the best because retail traders love to chase price. Probably most retail traders would have waited for this candlestick to start buying because they'd be like, oh, now it's going to the moon, right? They would say stuff like that. All that stuff that they learn online, go diamond hands and all that. And you're like, yeah, you should probably buy. And then boom, slams down. And they're like, oh man, look at this massive engulfing bearish candle. Time to sell. And then they sell where? Right into where banks buy. All right. Always late to the move, perpetually late to the move. Always a bridesmaid, never a bride. Total. All that stuff. Right. All right. So everyone's understanding structure so far. For all of you who are new, does this make sense in terms of how professionals approach the market? We're identifying where the banks buy. We're identifying where the banks sell. We're not chasing the initial amounts. We're waiting for price to come back to then evaluate if we have an opportunity to take advantage of the unfilled orders and buy and sell with the banks. Cool, cool, cool. All right, so we have higher time frames done. We always do a minimum of 3 time frames in terms of analysis, guys. So we're going to drill down to our intermediate time frame now. What I want to evaluate in my ITF is my current trend. What is my current trend here on the weeklies for Upstart? Is this an uptrend, a downtrend, or a sideways moving trend here on this weekly time frame? You guys tell me in the chat, up, down, or sideways. I don't know what a Drake candle is. There you go. Uptrend, right? Higher highs, higher lows all day. So what does that mean for us as traders, guys? Well, that means ideally we would like to go long. We would rather trade with trend than against trend because trend trades are higher probability trades. No, we're not in consolidation, man. We have higher highs, higher lows. Higher highs, higher lows, higher highs, higher lows, higher highs. Clear uptrend. Ideally, we would like to go long. We would rather trade with trend than against trend because trend trades are higher probability trades, right? Problem is, where am I sitting right now in terms of current price? I'm sitting in higher time frame supply. I'm sitting in an area where historically banks have sold heavily. So is this the right area for me to be trying to go long? Is this the right area? Trend is your friend, right? Yeah. No, it's not the best, right? That's not where I want to be buying. I want to be buying where banks sold historically in higher time frames? No. So what do I have to do? Well, I have 2 choices. Either I look to see if there's an opportunity for a counter trend trade, because even though we prefer trend trades, it doesn't mean we never take counter trend trades. If the circumstances justify a counter trend trade, there could be a reason for us to take it, right? We just know it's a lower probability, so everything has to look pretty perfect for us to be willing to take a counter trend trade. Or we have to wait for price to come back down to an area of institutional demand to see if we have an opportunity to go long. Does that make sense, everyone? So that's what those are my choices right now. Price is currently in higher time frame supply. Either I see if I can take a counter trend trade, or I have to wait for price to come back down to an area of institutional demand to see if I have an opportunity to buy. Cool. Yeah, we're going to drill down to the lower time frame to see what the structure is, Supreme, right? Maybe there's an opportunity for a counter trend trade. Maybe not. I'll find out in a second because we're just on our intermediate time frames. So I'm marking off the levels of institutional order flow. Here I have impulse, balance, balance, impulse. Can everyone see that level? That's an impulse, balance, impulse, pivot, reversal, right? Drop, balance, rally, area of institutional buying. And the nice thing about that level is that is weekly, monthly correlation, zones on top of zones. Do we like zones on top of zones, guys? We love zones on top of zones, right? We love, love, love multiple time frame correlation because think about what it represents. If I have multiple banks and institutions buying at or near the same price point, the area in which their order blocks overlap each other will form even stronger levels of imbalance. Does that make sense, everyone? So we love multiple time frame correlation. It's lobster. Like the food? There you go, Supreme. We also have a standalone continuation right here, a little impulse, balance, impulse, standalone continuation here on the weekly. And then here on the supply side, we have impulse, balance, impulse, continuation. That is also weekly, monthly correlation. And we're in that zone right now. So maybe there will be an opportunity for a counter trend trade. Let's drill down to the dailies and see if there's anything actionable. So we started on the higher time frame. We drilled down to our intermediate time frame to get more clarity and see trend. And now we're going to drill down to the daily time frame, our lower time frame, to look for an actual entry because we're looking for a swing trade here. I don't need this circle here anymore, right, guys? Everyone understand that was the first retracement? There you go, Ben. What's that called again? Synesthesia? When you can taste colors and stuff like that? All right, so here we are on the dailies. And this is where we're looking for actual opportunities to get into the trade. So on the dailies, do I have any clear institutional order flow? I have an area of institutional buying right here. That is an impulse, balance, balance, impulse, pivot, reversal. It's actually a continuation technically. Can I trade this level, guys? Nice, Minge. Yeah, it makes it a little easier to have it all on one piece of paper, right? Can everyone see the structure, by the way? Does everyone understand the structure of that zone? It's a great question, Fidel. You'd almost say that's where we spend the majority of our time doing analysis, is which one is the most probable and which one's the best quality. Does everyone understand the structure of it? This candle closed right here. So I have a gap up, which is an impulsive move. I have balance, and then I have a gap up, which is an impulsive move. So I have impulse, balance, balance, impulse, because gaps matter, guys. We can't ignore gaps. So some bank bought here, driving price action up, leaving behind unfilled orders. Price retraced, came back in, hit those unfilled orders for the first time. That was the first retracement right here, right? And because there was that big pile of unfilled buy orders, what happened to price? Well, if there are more buyers and sellers, that causes price to go up. Can everyone see the reaction? Can you see the structure? Because it's a little tougher structure, right? This is why I teach you guys the analysis behind structure and rather than just patterns. Is that an easy pattern for retail traders to see, guys? If you're not an experienced trader, is that easy for you to see? That's going to be a little more challenging, right? Some of these levels are really easy to see, right? Some of them are a little more challenging to see. How many would have gotten that right? How many of you guys would have seen that level? There you go, Tyree. No supply is negated yet. It's helium. All of them are still valid. Yeah, some people will, some people won't. That's why trading is practice, right? Eventually you get to the point where you're like, oh, impulse, balance, impulse, right? But it's just a matter of practice. That's just the reality of it, right? So it's not just memorizing patterns, understanding structure. You can see, came out, came back in, hit the unfilled orders, already popped up. Would I have traded this level though? Phantom members, would I have taken that trade? It worked, right? It teaches people that institutional order flow works, but would I have taken that trade? I would not. I would not have taken that trade. It's a lower time frame zone inside of higher time frame oppositional structure. I would never take that trade. And that's where your selectivity comes into play, right? Trading is not just about understanding what are high probability. Like, am I surprised that price came back in and bounced off? No, that's literally exactly what I would expect it to do. I would expect it to do that, right? I would have expected it to bounce because there was an imbalance of unfilled orders here. High probability that it was going to react up. But just because I expect it to do it, that doesn't mean it's going to do that. There's no guarantees of that, right? All trading is at its heart is just probability analysis. The best we can do is determine whether a trade is a high probability trade or low probability trade, but it's never a guarantee. So it's not enough for it to just be a high probability trade. It has to be a worthwhile trade for me to take. And me trading lower time frame zones inside of higher time frame oppositional structure with a poor risk to reward ratio is not even remotely good enough. That doesn't score even close to high enough, right? We have a 20-point scoring system. This would be nowhere close to 20 points. Does that make sense, everyone? Good rule of thumb, right, man? Exactly right. Don't press the buy button in higher time frame supply. Don't press the sell button in higher time frame demand. SoFi? Sure. What was the other one you'd asked there, Fidel? You'd asked another one. SoFi and one more. Cool. What was yours, Fidel? I know you'd asked me one. I apologize, man. I was just in the middle of conversation. So that's a no-go for us, even though it worked, right? Good example of a trade that we would have identified, we wouldn't have taken. Going to keep going down. How about this one? Too close to supply. Not going to take that. Everyday Supreme. Going to keep going down. How about this little guy? Well, this little impulse bounce, impulse pay reversal, that is an area of institutional demand, and it's correlating with higher time frame structure. That is daily, weekly correlation. Is this a potentially viable trade? Well, it has a nice little breakaway gap, which we like a breakaway gap. It didn't quite break past opposition initially. Can everyone see? There was opposition, and you see how it hesitated there? It did eventually gap up, but at first it stopped right here. Can everyone see how it stopped just below oppositional structure? This is more for Phantom members. You know how we look at that? That's why we look at that, right? Because why did it stop there? Why didn't it just keep going initially? Why did it stop there first and then gap up and then retrace? Who can tell me that? There's a little more involved. Pound yen? We already did spot gold, brother. There was nothing on it that interested us, though, to give you the shorthand of it. You missed 180 pips. Pips? Were you trading it on through Forex? Gotcha. Well, no, if he's trading, yeah, NQ you would normally say, but sometimes people just use the shorthand instead of saying NAS 100. Anyway, so is this a potentially viable trade? It's potentially viable at the 54.43. Let me see what my risk to reward is on it, whether it's worthwhile in terms of risk to reward, because that's a very important aspect of trading, right? Not just finding high probability trades, but finding high probability trades that have low risk with high profit targets. 3-to-1, so it does meet our standards of at least a 3-to-1 reward to risk ratio. The reason you want to focus on 3-to-1s is 3-to-1s are very forgiving, guys. If you focus on trades that are 3-to-1s or higher, you can be wrong 75% of the time and break even, which means anything above a 25% win rate is profitability, right? So being selective about your trades makes you a better trader. Sometimes taking fewer trades makes you more profitable than taking more trades, right? Cool. So this is a potentially viable level here. We're on the dailies right now. Forex by its equities. We're on upstart. So we're on 54.43, multiple time frame correlation, potential opportunity to go long. As always, we'd have to see if price does come back down, how it comes back down, and whether that affects our risk reward ratio. On the supply side, is there anything I can do here? Let's go see. I do have a continuation level right here. I have this impulse in, balance, impulse out. That's a continuation pattern right there, area of institutional selling. But there's a problem with it. What's the problem, guys? We've already hit it. We already hit it right there. And then we hit it again right there. So this thing has been hit twice. Am I willing to take a counter trend trade that's being hit for the third time? Counter trend being hit for the third time. Only if they score high enough, Minge. How often? I don't know. Whenever they set up. It's not like I'm against counter trend trades, guys. If they score high enough, I'll take it. Yeah, but not on third hit. Third hit's done. This thing's cooked. That supply is cooked. We have institutional buying right here. They're trying to actively break through it. I'm not messing with that supply zone, right? But this long is viable. So potentially long down here at the 54.43. Cool. Everybody tracking so far? Any questions about what we just did there in terms of analysis? He is in a trade all the time, G. Because Blue's a day trader. Like, how often do you guys see me for my higher time frames looking at levels and being like, ah, it's not good enough for me? And then blue will take a trade on, like, I'll give you an example that's very easy. We just looked at it the other day. AMD, right? AMD, for me, from the higher time frame perspective, I wasn't willing to take unless it was going to be a confirmation trade because we'd already hit the supply level once, right? So we were coming in for a second time. Was this surprising, guys? That price came back in to major institutional selling. I'm going to squish it up so you guys can see it. That was where the zone was formed, right? Back in November 2024. Price shot away, gapped out, retested initially right there, came back out. So for me, counter trend already retested. I'm going to be looking for what's called a confirmation trade, right? Which means I would have waited for this red candle close. But for blue, blue drills down to lower time frames. So even though from my higher time frame perspective, when this red candle closed, I have demand right here. I looked at it in terms of risk toward ratio, and I said, and with this red candle close, what's my profit target on this? If I were to take this short, entry right there, stop loss right there, I'm looking at a 1.9 to 1. It's not worth my time. But blue will drill down to lower time frames so he can find structure within there that does have a good enough reward to risk ratio where it's still worth it. Does that make sense? So that's something where you have to get that trade-off. When we buy an option, there's expiration will affect the risk reward. Any tips on this? We cover all that inside of options focus. So that's going to be part of price slicing, right? Understanding how to properly evaluate which contracts are worth taking, which ones are not. It's way too much for me to cover here, brother. I can't get into all that because I would have to assume that people understand everything from essentials and then that they understand all aspects of the Greeks and OI and IV. Like there's just a lot to it for me to explain here on social media, brother. So I can't get into all that here on TikTok, but that's something we cover inside of options focus. So that's why you'll see a lot of times blue will be in trades where we'll have identified the level, but for me, from my higher time frame swinging perspective, I'm like, it's not worth it for me. He'll be in the trade on a lower time frame, right? So he is taking many more trades. No problem, brother. Yeah, blue's a master trader, man. Nice. Yeah. Well, let me get through this list I have right now, TAF, because I have quite a few, brother. Like we're already technically all the way through overtime, and we're only up here, right? So I don't want to add more until I get these done, right? Let me get these done first because I do have a meeting coming up soon, guys. So let me start prioritizing a little bit more analysis here. All right. Let's go to NVIDIA. On to NVIDIA. NVDA. All right. So here on NVIDIA. Nice, dude. Guys, I don't talk about blues, profitability on social media, right? Because we're very careful about that sort of stuff to the general public. But I will tell you, very few day traders can do what he does, right? Because do I know other day traders that are good traders like Blue is? Yes. But do I know a lot of professional traders that are willing to put the time and effort in the way Blue is? No, because you have to have a certain level of passion to be willing to put that level of effort in, right? Like Blue loves trading, right? Like if you asked me to go and spend the next 8 hours trading, would I go spend the next 8 hours trading? I'd be like, no, thanks. I have no interest whatsoever in doing that. But for Blue, it's not something where he looks at it as like, oh, all that time. He looks at it as like, awesome. I can't wait. Like he loves doing it. It's literally his favorite thing to do. So that is who he is 24 hours a day, 7 days a week, guys. He loves trading. He loves doing it. Whether you're with him or not, he is trading, right? So that's just the reality of his passion in life. He thinks of trading as one of the best things to do in the world. It's one of the most fun things to do for him. I look at trading as more as like, at this point, you got to think I'm 27 years in, guys. So I look at it as more almost like a chore that I do because I like the results. You know what I mean? That's the way I think of it. So like I have a different perspective. I don't have the same passion that he does in that regard. Like when I was younger, I was really excited about it. But over time that faded for me and it just became something I just did, I won't stop doing it. I'll never stop trading because why would I? It provides me with my lifestyle. But I don't have that same excitement anymore. That's why one of the reasons I like doing stuff with you guys, because it's more fun to see you guys excited. Like when you guys message me like, man, I just did as much as I would have working for the entire week, right? I'm like, that's awesome, man. Because it's like I don't get that excitement anymore. So it's kind of cool to live vicariously through you guys sometimes, seeing you guys get excited about it. And it's cool when you guys actually get financially independent and stuff like that. That's gratifying as well, But yeah, levels of excitement, that passion that Blue has, that's a rarity in the professional world, man. I only have one other friend who's as obsessed with trading as Blue is. That's a professional trader. All right, 4 hour, multiple time frame correlation. Let's drill down to the hourlies, because if we're starting on the dailies here, we're basically looking for a day trade here on NVIDIA. That's not the best, right? It's a little messy there. And you can see it hit. So this has already been hit. We've already hit the level right here. We hit the unfilled orders. We gave a little bit of reaction. Can everyone see that? That was where we hit the unfilled orders from up here. So we hit this area of, oops, sorry, I didn't mean to do that. We hit this area of multiple time frame correlation, right? Hit the unfilled orders. And because there were more sellers and buyers, price pushed back down. And then you can see somebody who's buying here driving price action up. So we formed a little bit of a continuation here on the buy side. Problem with this for us is like risk reward sucks now, man. Like I can't take the supply again. It's already been hit. I can't really take, well, maybe I can take a demand here. Oops, did I not do that right? Demand. Let me see what this guy, I don't know. It's not enough. It's going to be like what, a 2.5 to 1. It's not enough meat on the bone. This one's already been hit. I don't have anything good, man. I don't have anything clean, right? This level impulsed out, came back in at the unfilled orders, popped up, came back in, popped up, came back in, popped up. That's 3 hits to that demand zone already. There's just nothing clean here for me, brother. Can't trade the supply, can't trade the demand. I don't have anything good, man. Nothing worthwhile in terms of risk reward. There you go, G. Cool. So nothing I would take right now, brother. I wouldn't take anything right now. I'm not excited about any of these levels. That's what I would say about NVIDIA. All right, on to WM. Don't forget, guys, for anybody who's new, on NVIDIA, you're saying? Are you saying like the top? Like this one up here? I don't think there's enough meat on the bone, man. Even if you get to the MTFC, even if you get to the multiple time frame correlation, what am I looking at? Oh, on the daily, like standalone? I don't trade standalones without having multiple time frame. So like, even if I was going to trade that daily, I would need to have structure on other time frames. You get what I'm saying? So I'm, regardless of whatever I'm doing, I'm always doing at least 3 time frames in terms of analysis to get better clarity. So if daily is the only level on which I have structure, I'm not trading just the daily. Just the daily on its own is not enough for me. But it's a good question, man. The question was, would I trade just the supply? I understood what you said. I just wouldn't trade it. It's a standalone daily. I don't have any correlating structure. It's at all-time highs. I'm not willing to trade that. I need to have at least 3 time frames justifying my structure, because standalones without any other structure aren't things that I'm willing to trade typically, especially at ATH. Yeah, if you're more selective, even better. I mean, we did that analysis. Remember, we did that on whatever. We did on both NQ and ES. Remember? Like, you guys can choose any week you want, NQ, ES, and we can just go through every single level marked off. Like, if you just start in the hourlies, having that higher time frame correlation, I know it's low time frames, but I'm saying higher time frame for futures trading, right, for scalping. If you just take first retracements of those and you just manage those trades, guys, we have yet to find a week where it doesn't work. Some weeks are more profitable, some weeks are less profitable, but I have yet to find a week where if you just traded properly, took first retracements to those hourlies, right, and then managed the trade. Like if it hit a 1-to-1, took partial profit off, moved stop loss break even, and then left runners, 0 so far that haven't worked, that haven't been profitable for the week, right? So it's just, is IOF perfect? No. Right? Any trade has the potential to lose. There's no such thing as perfect trading. But if you understand how to do it properly, you can really skew the odds in your favor, you know? I'm going to record a video on that later on, actually. I was thinking about it because people ask me that all the time. Like, isn't it just like, I can't say the word, isn't trading just like blank? And I'll be like, no, it's not like blank. You have to understand the difference between the two, right? Nothing on the monthlies here, man. That structure is not really good. Let's drill down to the weeklies here in waste management, see what the weeklies give us. All right, here I have a nice continuation, little impulse balance, impulse continuation, area of institutional selling. It looks like we might be setting up another one, right, man? We might be setting up another continuation right here, depending on how this candle closes. But let's just draw the one we have. So I have impulse in, balance, balance, impulse out, area of institutional selling right here. I mean, I could just be a little tighter structure, just do that. I'm going to do that. On the buy side, oh no, that's not good. That's demand. And that's not broken, man. I don't like that. I don't like that at all. All right, we have this big, massive, hideous demand zone right here. Impulse, bounce, 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 impulse. That's not good at all for us, right? That's not good at all. Well, whatever. Let's drill down to the daily, see what the dailies give us. How many of those would you catch on a week? How many of what's, G? There you go. There you go, Tyree. Everyone well, first of all, I don't really scalp, right, G? It's not something I do. I just do a lot of analysis for you guys because you guys asked me to do it. I don't really day trade. I swing trade. But everyone I've looked at has been roughly about 10 to 12 setups a week on average. So it's not like an overwhelming number of setups, you know? And that's why I kind of try and simplify a little bit. I think in the world of futures, where people will get themselves into trouble is sometimes with over trading, right? Sometimes with impulsive decision making, where they're making decisions more because they fear of missing out, stuff like that. They're making more emotional decisions rather than rational ones. And then of course revenge trading as well, right? So it's like being more selective with your trades and futures makes you a better trader. Oh, I'm saying how many setups there are on a weekly basis. Whether you catch every one, that's up to you, man. I would never watch all markets 24 hours a day. I want to sleep. Like there was a time in my life when I was young and I would wake up, to trade the London session. That time has come and gone, man. I don't wake up in the middle of the night to trade the London session on Forex anymore. I did it for several years, to be clear, guys. Like I would literally wake up, trade for an hour, and then go back to bed. But like nowadays, if you wake me up in the middle of the night at 45, dude, I don't end up falling back asleep as easily as I did when I was a kid, So like the idea of waking up in the middle of the night to trade for something that I don't really need, I don't need the money, it's absolutely insane to me now. But when I was a kid, I had no issues with it. I would wake up, go trade for an hour, and then I'd fall right back. Like I'd get back into bed, I'd fall asleep almost instantly. Unfortunately, things change as you get older. You look as far back as zones are still valid, man. If they're still valid, they're still valid, brother. Yeah, that's a lot of time, man. That's a lot of time on the charts. Let's go down to the fours here. This is where we're looking for an entry here on waste management. Do we have any order flow? Well, we have this pivot reversal right here, right? It's not pretty. It's not pretty at all. But it's there. It exists. Can I trade it? No. It's lower time frame zone inside of high time supply demand. So I'm not going to trade that. How about this little guy down here? Not really. That's not a base candle. Can everyone see how that's not a base candle? That's a start of the impulse, right? So that's not viable either because we've already hit that zone, right? We hit it right there. Can everyone see how we hit the zone? Before I delete it, can everyone see how we hit this 4-hour daily weekly correlation? Zones on top of zones on top of zones. Right at the MTFC. Where did price turn, guys? Right where all three zones correlate. Can everyone see that? Hit the unfilled orders, popped up. Would we have taken the trade? No, there's supply right here. So I don't really have anything good in terms of where we are because of risk to reward, man. Right? They're too close to each other. There's not enough meat on the bone to justify taking that trade long. Absolutely, Minge. I like it better. I will say when I first started trading, I was more of a scalper. But over time, like not even over a long period of time, but over a short period of time, I started realizing that I liked swing trading better because it was just less time consuming. Like nowadays, I trade 30, 40 minutes and I'm done, you know? I've not done Eurodollar yet. We'll see, man. Can't predict the future, Clever. Speaking of Eurodollar, here we are. For anybody who's new, guys, don't forget, workshop tomorrow night. If you would like to learn more about trading, free workshop tomorrow night. If you go right here to our TikTok profile, you can register right there. Just click right here, and it'll take you here, and you just click the register button to confirm your spot in the workshop. It is free, costs you nothing, and in the workshop, we'll do a deeper dive on all this stuff. We'll teach you more about how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell with them, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly. Leverage is very important. It allows you to reduce your risk, generate higher rates of return, the difference between all different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. It's free, it's fun, costs you nothing but some of your time. And if you are interested in becoming a member of TradePhantoms, if you want us to actually teach you and mentor you and trade live with you, you will have a special opportunity to enroll at a discounted rate because we have that 4th of July promotion going on this week. So good week if you're interested in becoming a member for you to take advantage of that discount. Eurodollar. All right, so you swing trade, Mr. Black. I swing trade. Yeah, that's what I do, my man. All right, let's go here on Eurodollar. So we bounced off that supply, but we weren't willing to trade it anyway. Nothing's really changed for me, man. I mean, the only level I'm really interested in on Eurodollar, because supply is a little bit beat up with that demand right there, man. Just so I'll draw it in. Hold on a second. I trade mostly forex and options day to day, man. I'm the same thing, man. The only level I'm really interested in here is this guy, the 1184, 111.84. On the supply side, it's not that it's a bad level. It's actually a pretty good level, but the risk reward is tight, right? The risk reward, either way, it's already hit. So if you didn't take it already, you're a little late now. But I think when we measured this out, I could be wrong, but I'm pretty sure when we measured this out earlier, it didn't give us 3-1. And considering I use buffers in forex trading, it's even tighter than that. Yeah, see, it's only 2-1, man. So it's like if you took the trade and you're in it, if you already took that hit, because I was the first retracement, guys. So it's not that the zone is bad, right? Like anything surprising of it reversing out of the supply zone, guys? Literally what we'd expect it to do, right? Hits the unfilled sellers, rejects back down. Would I take that trade? Nah, it's just not enough meat on the bone for me. Now this guy up here, I'm not sure if this was hit. Let me just double check. I think that one's still clean. No. Sorry. Hit. 3 hits that level. Absolutely not. Yeah, so I can say the same thing, man. That 111.84 is the only one that I'm really interested in. If you prefer Bimblet, I can certainly send that to you. Just send me a message and I can send it to you. During the workshop, we just turn on the promotional pricing on the website. But if you prefer, if you don't want to wait for the workshop, if you've already been in a workshop and you just want to take advantage of the promo, just shoot me a message and I'll send you the promo code. Yeah, super dirty. What's the challenge, Minge? Hit me with it, brother. All right, on 10Q, let's go check out some futures trading, guys. It's not a challenge for me. This is a waste of my time, Minge. I don't want to waste my time. Dude, I don't even trade futures for myself. Why would I want to go and do that? Go waste my time with something I don't care about? That's like when people ask me, why do I want to compete in the combines? Like, why? To prove what to whom? I've already been trading for 27 years. I live off my trading. I don't really need to prove anything to anybody, you know? The only people who do that sort of stuff are people that are trying to prove something to other people. And I'm way past worrying about what other people think, man. That's one of the nice things of getting older, guys. You get to a point where you could care less about what other people think. That was one of the best benefits of genuinely getting older, is you really don't care. Do features with prop firms? None of the Phantom. You mean members, Ben? Or do you mean like the actual trade fan, like the three of us, myself, Mr. Green, Mr. Blue? Nice, Minge. No. Well, we're again. I don't want to make earnings representation. We're all fine, man. We don't need outside money. Like at this point, I would look at it as me sacrificing money for no reason. Like I don't. I'm not sitting here going, man, I wish I had more capital to trade with. That's the best way I can put it. That's not an issue I'm concerned with. If I wanted to trade with more capital, I would just put more capital in. There's nothing precluding me from doing that. So that I'm already capable of doing on my own. I don't need outside funding for that. And I certainly don't need somebody telling me what my restrictions are and how I can trade. I'll trade however I want to trade. Yeah. Now, if I was young and still learning and I was in the phase and I got into profitability and I was consistent, would I use that if I was starting over? Sure. No problem with it, you know. But I don't need that at this point, man. Kind of like if I'm riding a bike and I've been riding a bike for 20 years, I don't need training wheels anymore, you know? Not that I'm saying prop firms are training wheels. I'm just, you get my point. It's not necessary for me at this point. 15. Sorry, I'm not really explaining. For anybody who's new, you're probably loving this, right? How are the newbies doing with this? Anybody new in the room lost? You understanding everything we're doing? Look at that first hit, second hit. Beautiful trades, right? It is what it is. Already done. Let's see if this one's valid. That one. All right. Down to the fives. No, it hasn't been done yet, Abdul. I'm trying to catch up a little bit because I got a meeting coming up in 9 minutes. So I don't have that much time. I'm running out of time. I mean, it's hit. It's a nice level, 515. It's valid. There it was. There was your entry. Right there. Right at the MTFC. Can't trade that. Potentially trade here. Look at that little continuation right there. Impulse balance, impulse continuation, area of institutional selling right there. 5 minute, 15 minute, 1 hour correlation, which is what we like. And right now, we're still clean on it. Let me just drill down to the ones, make sure there's nothing missing there. I want to see that oppositional pushback. I mean, I can pretty much guarantee there will be oppositional pushback on the ones. There you go, Wyckoff. Your world still exists sometimes on low time frames. All right, there's my distribution. MTFC, I mean, you could trade it straight at the 5, which is 22873.75, or you could wait for the multiple time frame correlation at the 22877.25. But considering how slight difference that is, I'd probably look for an entry right at the 5, even if it does go a little deeper. I wouldn't really care. So 22873.75 as it stands right now, that is a potential short position on Q. Clean, good, strong price action, has not been retested, and you have multiple time frame correlation. How do I know the yellow zones are fundamentals without knowing? Did I draw any yellow zones? I didn't draw any yellow zones, man. There are no yellow zones here. No, it's another meeting, Minge. That's not fundamentals. Yellow circles are where we're looking for entries. No, that's where we're entering trades. So the way we trade is we identify where the banks buy, identify where the banks sell, wait for price come back, and buy where the banks, buy where the banks, buy where the banks. So yellow circles are where we're looking for entries. So do I, Tyree. I wish, I don't even want to say the name anymore because I feel like if you complain about them, that also causes problems. I wish they would allow us to do that. That's what I can say. I wish we could do that. Because no reason was given why we can't. It just says can't anymore. So I don't know, man. It is what it is. What can we do, man? We just keep plugging away, doing what we can do, right? Yeah, I don't think I'll be able to get to US 30, man. I only got 7 minutes. We can go look at GC, though. Let's go look at some gold futures. GC. I keep forgetting that. Gotta hit it. Gotta click it. All right, let's clear it. Start from scratch. I'm just going to go a little faster, guys. So if you're new, bear with me. Well, if you're new, go to the workshop tomorrow. That's better use of your time if you're lost here right now. All right. Pivot, kind of, sort of, kind of, right? This is a clear pivot right here. That's the real pivot. That's the retest. Came back in, popped. So institutional buying right there. Sell side, unfortunately, is right here. Right? Pivot reversal right there. Institutional selling. That's already been hit as well. So both supply and demand have already been hit. Drill down to the 15s here. I have an account with them, Minge, but I don't use it primarily because I don't know if you guys remember a company called FXCM. I can, but that's going to mess up zone structure, Hoove. So I wouldn't draw my zones on electronic trading hours. So that messes everything up. So you can go and look at it to see if prices are triggered, but I would not recommend drawing your zones off of those timeframes. So when they were booted out of the country, all of their accounts transferred over to forex.com. And so I've had it since then. I don't remember how many years ago that was. And so that's where I do most of my FX trading. But I have the other one just because you guys have it, because a lot of members have it. So I have one with it, but I have like nothing in it. It was more just to know the platform, which it's very, very similar, to be clear. Like both those platforms are very similar. Doesn't look good. Let's get on the 5s. Nah. No. This is already hit. No. I mean, this isn't hit, but it's like, well, it is. It's a retest of that. No. Maybe you can trade. No, you shouldn't trade just that. No. On the sell side, retest. I mean, there's a level there, but it's a retest, I don't like it, dude. I wouldn't trade these levels. If you're going to try and trade this level at the 3363.3, then do it as a confirmation trade. But that's about it. Not a lot here on GC for me. Done. On to the next one. Pound Aussie. Pound Aussie still in the room? Because that was a while ago, man, that you guys asked that. Liquidity changes, and it changes the zone structure. Yes, Bim. I can't. Yes. I can't respond to that currently, but yes, we do. But I can't say anything about that at this exact moment. There are things that I can say and things that I can't say, and that's one of the things I can't say right now. I do not, Airfliz. I just use it here for you guys. Yeah, they're good, man. So I'm supposed to turn on the light for a futures trading view and switch your. I think you will find that the zones will be more accurate if you do it that way, G. There's nothing wrong with looking at ETH for prices being triggered, right? But I think if you find when you draw the zones on the RTH, you'll have better quality zones. So I would recommend drawing the zones on RTH. Nothing wrong with using ETH for price being triggered. And a good example of that would have been crude, right? Crude last week, because it triggered that zone in ETH. But I believe it triggered during ETH, didn't it? I could be wrong. I think it did. I don't remember. I don't really trade crude, so I don't really care. But I think it triggered during ETH. So it would have been good to be aware of that level, but draw it and then, yeah, that'd be the place, Ben. Or just shoot me a message, whatever. Yeah, there's nothing wrong with looking at it. It's just it messes your zone structure. That's all, right? Institutional buying right here, institutional selling right here, down to the weeklies here on Pound Aussie. Still in broken control, still in an uptrend here on the weeklies. Institutional buying right here, already been hit. Institutional selling right here, crushing your risk to reward, right? Not looking good for that regard. Oh no, terrible, terrible. Look at that. Already hit demand, backup supply, backup demand, bounce out supply, set a lower time frame level here, and that's already been hit once. Then we candle close through it, so that one worked once, then broke. That was a 4.6 to 1 if you took that first hit for that 4 hour. This one worked once, bounced all the way up supply, came back down. That one's gone as well. That lower time frame level also worked, but we wouldn't have traded it. And just a lot, really beat up, man. All right, guys, I got to go. Got a call coming in because I have my call right here at 1. Thank everyone. For anybody who wants to come to the workshop, if you go right here to our profile, you can register right here on TikTok. Just click right here. It'll take you right to this place. And then just click this purple register here button to confirm your spot. In the workshop, it's going to be tomorrow at 7 p.m. Eastern. We will be doing a deeper dive on all this stuff, guys. Teach you more about how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with them, how to trade in all directions, whether the market is bullish, bearish, consolidating, how to use leverage properly so you can reduce your risk, generate high rates of return, the difference between all different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it, guys. It's free, it's fun, costs nothing but some of your time. And if you're interested in becoming a Trade Phantoms Pro member, if you're like, this is cool, I would like to learn from these guys, you will have a special opportunity to enroll at a discounted rate. So if you want us to teach and mentor you and trade live with you, we even provide you with trades that we ourselves take in the market, you'll have a special opportunity to join at a discount because we have that July 4th promotion going on. Cool. All right, guys. Thanks.